Hello and welcome to the daily Forex report for July 3rd. We're going to look at the US Japanese yen pair first. This pair did close up on Friday. It moved much higher before pulling back to close. We are looking for this pair to potentially go as high as 81.51, possibly as low as 80.10. Look for some resistance around 81.15 and look for some support around 80.25. Alright, now looking at the Euro USD pair, this pair continues to move to the upside. It did break the previous session's high, but did close below it. It did move up all week, gapped up just a little bit. We should see it pull back to the previous Friday's close, and once we see that, it might be pushing forward, pushing to the upside. It did have a very strong week last week, so we'll have to see if that is played out due to the market action here. We broke the high but closed below it, and our low here was real close to the previous session's low. It wasn't this nice upward move that we had each day for the first 3 days. So really be interesting to see what's going to come of this, whether it's going to go to the upside or pull back at this point. We are looking for it to potentially go as high as 146.67, possibly as low as 143.63. Look for some resistance around 145.65 and look for some support around 144.25. Now the pound US dollar pair, this pair created an inside bar on Friday. It did gap down at the open about 15 pips. We are looking for that to retrace. Look for it to potentially go as high as 161.60, possibly as low as 159.19. Look for some resistance around 161.15 and look for some support around 159.65. Now the US Swiss, this pair gapped down at the open, not too far, but did gap. We are looking for that to fill prior to the week's close. Look for it to potentially go as high as 0.8568, possibly as low as 0.8346. Look for some resistance around 0.8525 and look for some support around 0.8400. Alright, now as far as news announcements go, we don't have any significant news announcements coming out tomorrow. It is the 4th of July, so the U.S. markets will be closed. So keep that in mind. Should be some very low volume. As far as trades I'm looking at during this next session, the U.S. Japanese yen pair did create a swing trade opportunity over the last 3 sessions. Not sure if we're going to get there as far as the breakout of this trend line. It's pretty good ways from it. However, if we do, we can look for it to at least go up and tag that high. This would be roughly a move of about 14 pips, just a quick scalp as it would be. About 32 pips from that. Definitely could see that kind of volume here in the U.S. Japanese yen pair. Just realize that like I said, we are going to the U.S. market is closed, so we should have a little bit lighter volume than usual. Now the pound US dollar pair did create an inside bar over the last session, or 2 sessions rather. We will be looking for the breakout to occur to the upside. The next logical spot as far as previous support that would now be resistance is roughly about 33, 36, somewhere in there, 35 pips to the upside. Looking to buy around the 161.16 mark, looking to exit around the 161.52 mark. Now to the downside, which is a little bit further jump, a pretty quick move on this one would be about a 20 pip move to the downside. So dropping in around the 159.70 mark, getting out around the 159.49 mark for that short. There's a little bit closer look at that. Do be aware though that to the downside we'd be looking at about 102 pips. Not necessarily uncommon for this pair to move that much, just be aware of it. To the upside about 105 to go through our 2 targets. Hope that helps. Until next time, this is Jason Fielder. Good trading.
Welcome to the CFD Training Strategy Roboone video. In this video, you are going to learn why this easy-to-implement strategy can truly make a difference when you are trading. This video is sweet, short and to the point, so you can better understand how to correctly use this trading strategy for consistent profits. Firstly, we named this CFD trading strategy Roboone, since it is basically a mechanic trading method that enables fully emotion-free approach. The Roboone CFD trading strategy is executed during the day. Now, why does this strategy work better with CFDs? Simple. It is because it trades both long and short, and instead of having stop exits, it uses a reverse position. Now, you are probably asking yourself, what is reverse position, right? Easy. This means that if you are long, then you would switch and immediately trade short. Or on the other hand, if you are short, then you would switch to long. With the Roboone CFD trading strategy, you do not need an exit stop. You only need simple directional changes by having an order size that is double. This is a practical example. Just imagine that you are long one CFD. So instead of having a stop of one CFD, you simply sell two CFDs. This way, you would only be short one CFD. The beauty of this system and the reason it is so effective is that it is running all the time. Remember, the Robo system is used mainly for share CFDs. It trades both sides of the market, long and short. The trades can last from 1 day up to 10 days, but keep in mind that 3 days is usually the ideal time frame. When joining the Trading Lounge, we will provide you the exact prices for the trade, the entry and reverse order that will allow you to have an unfair advantage over other struggling traders. The reverse order will be precisely updated each day before the market opens, and if there are any changes in the trades, we will inform you about them. Also, you will be receiving trading notes on regular basis. The CFD trading strategy Roboone is a plug-and-play system which can be easily implemented and does not require you to be a slave to the monitor 24/7. It is perfect for those who do not have a lot of time and also for those who do not want to spend countless hours trading. All you have to do is place the orders each day before the market opens with your broker, make adjustments based on our signals and reports, and you are good to go.
A pip is typically defined as the smallest movement an exchange rate can make. Most currency pairs, like the pound-dollar, are quoted to the 4th decimal place like you see here. Let's look at an example to see what a 1 pip movement would look like for the pound-dollar. Assume that the buy price is currently quoted at 1.5863. If the price then changes to 1.5864, that would be an increase of 1 pip. Likewise, if the price changes from 1.5864 to 1.5863, that would be a decrease of 1 pip. Not all pairs are quoted to the 4th decimal place, like the dollar-yen, which is typically quoted to the 2nd decimal place. Therefore, in the case of the dollar-yen, a 1 pip move can be illustrated by a price change of 90.93 to 90.94. It is important to note that FXCM receives prices that are quoted in fractional pips. Fractional pip pricing includes an extra decimal place in the quote, which means the quotes are more precise. For example, we previously mentioned that the pound-dollar is typically quoted to the 4th decimal place. With fractional pip pricing, the pound-dollar is quoted to the 5th decimal place. With FXCM's fractional pip pricing, a price change from 1.58634 to 1.58645 would be 1.1 pips. The more precise quotes allow FXCM to provide you with the best available pricing to it, and for traders, the more precise pricing can mean lower transaction costs.